Very cool. So two stocks that I've been following pretty much locked in on until I exit them will be Finger Motion, which is FNGR, and then GTII. I'll finish with GTI. I'll start with Finger. Finger, I like for multiple reasons. I think the low float case is amazing. I like the fundamentals of the company more, which is usually not what I would say in a Nasdaq stock, but that's not like the main thing I go for. It has a 300 million market cap, has a 12 million float. Out of the 12 million, there's 8 restricted. So basically, the insiders are, in my opinion, don't have any plans on selling it currently. So that really means around 4 million is should be free floating. Now, the big thing that I've seen in this is predatory lending, and that's my main focus on my channel is to see that a lot of these businesses that lend money out to companies, especially vulnerable companies, they're actually not doing it for their best interest. They don't have any intentions of the company actually paying them off. And we've seen a lot of that in GTII, where most of these loans have the convertible shares or convertible debt note in the agreement. So what we're seeing with Finger Motion or FNGR is Lind Partners, LIND Partners. We believe is someone who is toxic lending money to them. So there's been, based on our data that we've got from buyins.net, this is a gentleman who has over 25 years experience in Wall Street. He gets his data from every single exchange that's on the market currently, all dark pool data. And he's shown us over 108 million shares short within the past, I believe, 2.5, 3 months. So even if we were conservatively saying there was 10 or 20 million float, to see that high of short interest in a company and to see the volume and volatility it's seen recently is absolutely ridiculous. In terms of the fundamental structure of the company, they're basically going to be the sole entity or sole provider of cell phone insurance in China. So I don't know exactly how they got this partnership. That's hopefully a question I will eventually have the chance of maybe asking an executive myself. But until then, what we know is that they have incredible relationships with the Chinese government, and they're actually going to be, in a way, like a monopoly. Basically, they are going to insure every single cell phone in China over the next few years. And it all is part of a payment program. Basically, the demographic in China, the way it works is everything is prepaid and everything is revolved around the cell phone. That was something I did not know. So when you buy ice cream on the corner, you do everything you scan through your phone. It's all like prepaid. So if you were go overseas and buy like a burner phone, that's how the entire cell phone dynamic works there. It's not a month-to-month billing cycle like we get with AT&T or something. They're prepaid cards, and what the Chinese government wants is it wants every cell phone insured. So that's going to be just built into that package already. So, in hopes, I would say within the next 2 to 3 years, Finger Motion fundamentally could be, earning hundreds of millions of dollars in revenue. And that's not speculation. You can go read on their press releases. They are going to be partnering with what I believe is going to be AIZ or Assurant. They named it was a multi-billion-dollar New York Stock Exchange insurance company. That's my own research. But right now, they just posted in a previous press release that came October 19th, that was 4 days ago, that they are doing a deal with Pacific Life Re. That's a huge insurance company, with Munich Re for possibly car insurance. That is also one of the largest insurance companies we know. I believe AIZ is also maybe the top insurance company in America. Don't quote me on that, but they certainly have incredible deals coming. They are also going to have access to a lot of data on the phones. So they're going to know a lot about the person that's using the phone. They're going to know their lifestyle, their habits, what they like to eat, what they like to, do activity wise, how fast they drive, what, things they're buying. So having this data, having the analytics on the phones is incredible. And the main thing that I really want to stress for people is they're going to be the sole provider, right? They are allowing AIZ or whatever major insurance company to come into China. They are the middlemen in a sense, and they're going to be the biggest market dominator, and that's why I really like finger motion. But it also does have that potential for the squeeze play on a micro or a short-term view, which is what a lot of people are hyped about. Most people don't really care about the fundamentals. That's not their thing, and I get that, especially in this market. Everything is quick, in and out, take profits. I understand that, but how small of a float it has, or actually small of a supply, how many shares that I believe are created short, finger motion is going to be a beast here. Please definitely do a little bit of research into there, because I believe in the next I would say 2 to 3 years this could fundamentally be a $50-$100 company, with some guarantees that they're going to get. GTII, everyone keeps talking about this. What's going to happen with GTII? The biggest thing that I like with GTI is we know so much about the person shorting the company. We know who it is. We know where they are, everything about them, their history. To make a very long story short, GTI has, two brothers, and they have some friends, but they are two lawyers out of Long Island, New York. They really know what they're doing. They are very good at being criminals. They have 15, 20 LLCs, multiple shell companies to hide their names. They're experts at shorting. So essentially, it's like we're going into a war with these guys. We're fighting smaller guys. I know people compare it to like AMC or GameStop. I think it's a little different personally, because you're not dealing with, a market maker that controls 70% of the order flow. You're not dealing with the cabals like BlackRock and Vanguard. I don't think that's people involved in this play personally. But taking it back 2 months ago, the stock was trading under $1. On average, it had 134,000 shares traded on the 3-month average. It had around 100 million market cap. Now we're sitting at about 1.13 billion market cap, which of course we know is extremely overvalued. That's ridiculous for a company that doesn't earn anything. But the thing that I want to take away from GTI, and what I would say to you, is that the company is on the same page as the shareholders, which is the biggest green flag or biggest positive. They actively communicate with the shareholders. They continuously have updated you in the press releases time after time, multiple times over the past few months. Some big takeaways is that they tried to run a special dividend through FINRA and the DTC. This was back in August, they reported. So June to August, they tried to do this. The DTC, which we know essentially holds all the shares on the back end, what the true supply that should be circulating there. So they went through them. They wanted to do a Picasso dividend and then also include some sort of Shiba Inu. The point of this was to basically issue something to shareholders in which shorts can't copy, and we see that all along with BBig, Vinco Ventures. We see the AMC did the preferred. There's so many companies that do it, and it does nothing. And you keep thinking to yourself, well, why isn't it working? Why can't we get the real share count? Why can't we squeeze these guys out? Because the reason why is you don't want to give ID numbers whenever you do a physical, or what I'll say, a special dividend. Any sort of dividend you give out, you don't want it to be copied. The second you put a QSIB number on it, the street will grab it, they will copy it, they will manipulate the stock. So what we saw on this, and mind you, again, I'll say it again, 134,000 share, 3-month average volume, 100 million market cap, a penny stock that was trading under $1, no volume, no activity, no one cared about it. Why would the DTC, why would FINRA come back and block it, not allow the CEO to provide that? They said we were going to expense it, we were going to conduct all the data, email the shareholders, or I should say mail the shareholders information, do a legal count with our lawyers, basically control the entire operation. And they said no. That was a big red flag for me. That said, okay, I want to get involved in this company, because there's no reason they should block it. Now, the reason why I think they blocked it is because they realized there's a huge discrepancy between the supply created and the supply circulating. And it was a headache that they did not want to deal with. Now, that was when the stock was trading at 40 cents. It's now trading at $4.40. The all-time high before we got involved was $4.55. It hit $8.97. Okay, so it's trading right now, or consolidating at its previous all-time company high. So that's another thing that I would say is important. Now, they do have goals moving forward, which was to merge. So they said they were going to do that. Now they provided us an update that they're going to merge with a law firm. This law firm is 1-800 Law Firm. The subsidiary company is Wildfire Media. You can look that up on the press release. Now, what they do is they have 85 million in receivables. I don't know what percentage they're going to get out of that, but let's just call it a conservative 50%. A law firm usually should take home around probably 70% plus of that gross revenue. So out of the 85 million receivables, call it 40. Company goes from $0 to $40 million in cash or net revenue. I think that's an incredible improvement fundamentally. So if you like fundamentals, that's your case right there. Over $1 billion market cap, which I do believe currently at the time is overvalued. But I will say when the pen goes to paper, that will certainly add a strong fundamental analysis to it. Is, hey, they got a law firm that is going to continue to push a lot of money. And also, there was warrants that were issued at 275. So the company gets the money from the warrants. There was, I believe, 21 million warrants out there. So eventually, when all of them are exercised at 275, they will get that money. So say, a couple $1 million more in revenue. So the company definitely is growing a lot. It didn't earn anything. 2 months, 3 months back, it earned $0. Doesn't have any employees. It's not fundamentally strong in any way, but it's certainly improving. So a lot of things that the company said it was going to do, it has continued to update time after time, which I love. I think that's the best part about it is they want to keep telling you, hey, we were going to merge with the law firm. And then a month later, now they said, hey, we got an auditor. They're going to go through with that deal. Also, that they're going to update you again and say FINRA is now investigating the stock, which is what we want, because we truly believe that this is predatory lending and that people are trying to destroy the stock. Now, I know I said a lot really quick, but the main point about both of these is that there is a fundamental, I guess we'll say there is a fundamental value there, but really what everyone wants is to make a lot of money quick, is to squeeze them out. What I will say is you have to be patient with these plays. As much as we want to make money is as much as short sellers want to, hold the stock down. It's not going to be a one-way ticket to the moon. It's not just going to I buy and the stock blows up. Some people got lucky and did that. They bought at 40 cents. 2-3 weeks later, it went to $9. And they're like, holy shit. They had no idea it was going to do that. But I've been in this for a while, been in it since May. I've watched it go all the way up to $2-3, back down to 40 cents, all the way up to $9, back down to $1.90, and it's up over $4 now. So in terms of what I would say is a company I would invest in long term, Finger Motion would definitely be the company. GTI, not so much. I would more want to play this out to see if we can break these guys and possibly get into double digits. That's where I think is realistic. From the data that I've looked at, the same analysts of the FINRA data every single day, it's 60-70+% short volume. It's time after time we see this. We see the ways that they have bear raids and people come out and bash the stock. I know someone mentioned before that people love to talk shit about the stock. That's the biggest thing ever is, them coming out and hating on it. It's all tactics. If you read about manuals on how bear raids and how things, are conducted, it's all for a specific reason. When the stock was running 60 cents through $2, $3, $4, $5, not a peep from anyone. When the stock gets attacked and it pin drops, everyone comes out of the woodwork and says the stock's fraudulent, it's pump and dump, it's a scam, you're being sold snake oil, all those things. I've heard every single thing under the book. But that is my, quick overview. I know I rifled off a lot of things quickly. I have a ton of videos on my YouTube about it, but really, knowing your enemy is really important. This is, call it AMC 2.0, whatever you want. I think there's definitely a potential for this to be a massive, massive play if we can break these guys. And I don't think they're big fish. I think they're really good at what they do. They've been destroying companies for over 20 years. And if you want to look a little more into who these guys are, the short sellers, they are the Kramer brothers out of Long Island, Kurt and Seth Kramer. They've been charged multiple times by the SEC for fraud. They've been fined $1.2 million for unregistered toxic lending and securities, over $1 million again for mortgage fraud, where they had, I believe, 18 properties all simultaneously default at the same time. They've been charged, they're sued by ticker symbol VNUE for selling over $5.4 billion worth of stock. So there's so many things that these guys have done over the past 20 years. My big statement to sort of finish this off is, if you're someone lending money to a company, how is there zero success rate for any of the companies you lent money to? It doesn't make any sense. If you lend money to a company, you don't want to destroy them. But that's the deal for these guys. They lend them money because they know everything about them. These companies come to them, they say, hey, we're vulnerable. We're like prey. We need this money to survive. We need it to conduct business operations. And we need it to, move forward, to get through these next 3 months. And they take advantage of that, and they go and they hammer the stock down, and they call all their buddies up, and you see it, on the level twos, Vert, OTCX, GTSM, ton of different market makers that go to work, and they sell the stock shorts. So when you watch the tape and you follow it and you understand, okay, this is how they're doing it. They're washing trades. They're crossing sales. It's very easy to identify. So appreciate you guys giving me the time. I rifled off a ton of shit like crazy. I hope you followed with me. I apologize if I spoke too quickly, but that's just GTI and Finger in a nutshell. They have a really good short-term play, but also there is some, potential for that fundamentals moving forward. So appreciate you guys giving me the opportunity. It means the world.
Absolutely. I do have a question for you. So I am very familiar with the Kramers. Do you guys have a list? You said they have over 20 companies, and I think I've spoken to Pronounced about it before. Do you guys have a list of every single one of the companies somewhere floating around that you guys that you could DM me, or that way we can look for potential other ones that are being suppressed by them?
Yeah, that is the heart. That's what I've been trying to do a lot. I know like HPIL was an old victim of them. There was, like I said, the VNUE. It's very tough to know who they're lending money to currently, because it's very hard. Even GTI 2 months ago, it's very difficult to find these stocks. They're very low cap. Some of these are like micro caps, like multiple fractions of a penny, where it's very difficult to even find information about them. But I do have a list. I would love to send you them. I'm sure, all the companies, or at least majority of them that they've lent money to, they definitely try to destroy. They're very, very good at what they do. I will say that. But I didn't know you knew about them. They have a long track record, a really long track record, and it's crazy. Longer than I've been alive. Their guys are very smart.
Yeah, they own over 1 billion shares of APTY, among other ones that are out there.
Wow, that's crazy. Yeah, if anyone else has any information, please send it, because we would love to take a little dip into a couple of their holdings and see how it affects them.
Absolutely. I'll message you later for it. Thank you so much for coming up here and sharing. I'm going to keep you up here in case someone comes up and has a question for you. Obviously, everyone listening, if you have come up and you have a question, be respectful. If you're not, I'm going to boot you as soon as you start talking. I'm pretty keen to sensing that. But absolutely. Moon, Chase, Kaz, EC, you guys have any questions?
Yeah, you mentioned GTI. They were merging with a company. I missed how much revenue you said that company has.
Yeah, this is 1-800 Law Firm. What you'll see on the tape, the subsidiary is Wildfire Media, so they do infomercials for the company. It's 1-800 Law Firm, and they did $85 million in receivables, and that's just, I think it was a few months ago. So the big thing too is they're not going to just stop at 85 million. It's a law firm. They're getting paid on the hour regardless. So that's another positive thing. And if there's a lot of issues with the brokers and warrants, they could also help you. But 85 million plus whatever money they got from the shareholders exercising the warrants, which was at a 275 strike. So conservatively, let's call it 40-50 million. 0 to 40-50 million.
Gotcha. Yeah, that was a really good explanation on the overall GTI, because people like, I know you probably know Lou. Man, like I'll tune in every now and then and see what he's talking about, and he'll be throwing out. I mean, I know you mentioned just like a double-digit price target, but he's like talking about $1,000. You know what I mean? Like,
yeah, it's tough. That's tough to do. You know?
I noticed he like Lou, like when he made a video about it initially, because he was doing AMC obviously, he got in like when it was at its peak, like when it was running, everybody's eyes were on it, and then he made a video about it, and then that had that run to like $9, and so I I just feel like, I mean, he also talked about RNVA and stuff like that, but
Oh my God, that was horrible.
no, that was a really good explanation. Appreciate it.
Yeah, no problem. The big I don't want to sit there and be a oh my God, $1,000. I can't do that. I don't know what it's gonna do. If I told you how many people ask me on a day, hey buddy, when are you selling? What's the price it's gonna go to? I have no idea. I can't sit there and tell you bought it at 60 cents and went to $9. What are you up? 1,000%. You didn't sell any. Like, what are you doing? It's even if it goes to 20 or 30, like you can't, no one knows. But, realistically, I think it'll break that all time high again. I would like to see it actually squeeze. Will it be a, $15-$20 stock? Will it be a $50 stock? I don't know. You have to deal in real time. I won't ever sit there on there and tell you it's going 100, it's going to 1,000 guaranteed, or I can't do that because I just don't know. I have no idea. It's not safe or smart to give anyone dates or prices because for all we know, it chugs hard to 15 and dies, and that's it. We have no idea.
Hey man, just wanted to give you a big shout out. Honestly, didn't really even hear about you before today, and I gotta say this is definitely exactly why we put these things together all the time, just to find people that are actually putting out good content out there and is completely neutral and unbiased in any certain type of way, and it's just literally just trying to put out some kind of either DD or positive vibes in there or ideas out there, and then let the rest do whatever it is that they're going to do. So yeah, I completely agree with you. We don't know what any stock is going to do whatsoever. But the only thing that we can do is just find as much information as we can. And you were dissecting both stocks pretty damn good. So just wanted to say, just a big shout out from my side. And I'm sure everybody else here agrees. And yeah, man, thank you for being here. You got my follow, and I'll definitely be sharing whatever content you put out. And that's what it's all about.
Awesome, man. I appreciate that. That means a lot to me. Yeah, I love coming on here. I usually don't do it because I'm really used to the toxic Twitter spaces of like the old AMC and just hating on you because you have a different opinion. But the last thing I'll say is if the story doesn't change on the stock, then there's nothing to get crazy about it. The stock from GTI went from 9 all the way down to 190. Nothing changed. The fundamentals didn't. The story didn't. Nothing. And it bounced back. For AMC, I know there's a lot of AMC people in here. I think the only difference is the story changes when you didn't have a say anymore. When you went from holding AMC stock to you don't have a choice, you have to go to 8, which we did prove is not it doesn't hold any value. You didn't have an option there. There was dilution. There was a lot of things that changed. The plan changed. The stock, the whole story, everything different. So that's where I had to make my decision, say, okay, the stock no longer makes sense. But have your conviction always. But if things don't feel right, I never bash anyone on, their opinions. If you do the research and you really understand the stock and you're willing to commit your all to it, you got to trust your gut. And I'm glad I did. But appreciate those words. I'd love to do it again with you guys. I'm going to let other people speak now. So thank you.
I missed all the other tickers that were discussed. I'm definitely going to listen in once the spaces is done and see what everybody has been sharing. Because what I have noticed recently is that anybody who gets out and talks about a stock with DD, there's usually more frequently now than before. There's something there that's at least worth looking into, because the traders that are left in the OTC that have survived or that have stuck around for the bullshit, they're becoming very selective. So if somebody is adamant and is putting out strings, DD packs and whatnot, and the chart is bottomed out, take a goddamn look at it. At the very least, you don't have to buy it. But look, because one of these is going to explode. Everything is oversold. Everything is at the bottom. There's a ton of good companies, good opportunities that that took a beating with the rest of the market. It's not just the OTC; it's the whole damn market is down. I mean, I'm not against looking at fresh plays. Everybody talks about the longs and your longs. Yeah, I've got my longs. Of course I do. and I'm not gonna desert my longs. I like my stocks, at least my conviction stocks, but they're not moving. So I got to look for what's moving. I got to look for what's making money, and there's something moving up. Stocks close green every day. There are stocks that close green every day, even on a day where the whole market drops. Like when SPY drops 4%, you got some small caps that are up 40% on the day. They exist. And I want to get my hands on them. And then the only way to do that is to actually be present. You can't make money in a market unless you're attending class every single day. So I'm definitely going to be listening to the spaces. Unfortunately, like I said, I missed the opening discussion. I'm going to be listening to it. I'm going to be looking into what everybody has to say. I kind of like the idea about the mining, not because I'm a miners trader. I never really cared for it, but look at the U.S. dollar. Look at look at inflation, gold, silver, et cetera, precious metals. That's the one thing that isn't down 40% on the year because it's precious metals. It's something maybe I might look into for swinging long. And without listening to other people's opinions that are more versed in this particular market, I'm not going to know what the hell I'm doing. I'm not going to pretend like I do. So I don't know if anybody has anything to toss in, something to check out if they want to update me on what was the hottest ticker you guys talked about, because I really missed everything. And I don't like to miss these.
I mean, I wrote down a list. XCPL was mentioned the most, obviously, throughout.
Yeah, I was going to say XCPL. I love it.
And then CNNA, the move into close on Friday, was a big one.
Is that a weed stock?
I'm not sure. Chase, I don't remember what happened after that. I was distracted Friday.
They said in their latest tweet that they were moving to a new, I have to pull it up. Was it a new sector? But I think they were getting out of that. So it sounded pretty fresh right off the bat.
And this one's Jason Black too, I think we had talked about. We didn't talk about it in Spaces, but Chase, we talked about it.
All right.
I think he owns this ticker.
CNNA?
Yeah. It moved. It had a lower share structure and moved pretty violently into close.
Okay.
Yeah, I just want to say something about what Scapa was talking about, as far as the OTC traders, and then after that I'm gonna go because what is it? House of Dragons just started. So, but no, yeah. What I was gonna say is basically, back before, obviously last year and the year before, we had it pretty good with OTC. So people were just, getting spoiled with 300, 500, 1,000% runners. And then now when they see a stock that goes up in a day by 50 or 2 days, 100 or 200% in 3 days, then it dumps, after the third day of completely just melting up. They think that it's just a scam and this and that. Stocks have to pull back. Also, as far as the dilution, there's going to be dilution in most of the stocks. We're trading the lowest of the lows. But yeah, I mean, traders, like I mentioned before, and I know we touch base on this a lot. The bashers and all the trolls and all that, usually they come out when they see that something has potential and they're just trying to bash it to get a little bit of a better entrance. But yeah, man, that's pretty much what it is. I know that, me and Scapa, we've been in the trenches for the options, so we haven't really been very active in the OTC. We're still holding most of the longs that we had before. Obviously, we all know how that is, how that's going right now for us and for a lot of other people, but it's just part of the game. Some people can stand it, some people can't, some people have the port size, some don't. So all I'm going to say is just trade to your port strategy. So if you have a smaller portfolio and you're trying to grow it, there's nothing wrong with flipping plays here and there. It's your money, it's your port. Just do whatever the hell you want to do. If you feel like you can hold it a little bit more, you've been in it for a little while or lower, like in trips or maybe dubs, and the stock is just pulling back from 2 pennies to 1 or 2.015, and you still want to hold it, and it is what it is. It's a different strategy. Other than that, that's pretty much it. It was pretty awesome spaces. I know, Scalpa, you're going to replay it, etc. And see you guys all tomorrow. Let's make some money. I know it's going to be pretty hot both ways starting this week. And futures are green right now. I don't know for how much longer because the dollar is actually going up, but we'll see what's going on, and we'll see you guys tomorrow this week. Let's make some money, guys. Talk to you guys later. Thank you for always coming in and having us here, and everybody that participated or anybody that's going to participate after I get out of here. Appreciate everybody. Good vibes, man. Don't let all the bashers and haters get to you. Just keep doing your thing and just fuck everybody else. Stick to the good ones, and you guys know who they are. If you like somebody a little bit more than the other, and that's fine, doesn't really matter, but always just show some kind of respect and everybody will get along.
Amen. I love that. I just want to say quick for Scalp, I don't know if he was here. I just talk real quick about GTI and finger motion for anyone else just listening that a lot of people messaged me, popped in quick. I'll do a real quick recap for you. For finger motion, it has the potential to be a monopoly in terms of being a cell phone insurance in China. So they essentially have an incredible relationship with the Chinese government. They're going to be the sole provider, sole entity of insurance for every single cell phone there, which I believe is at 1.5 billion. But really, they're a data company, so they actually own a lot of the rights to basically knowing everything about the individual, what they like, what their habits are, what their health habits, what they're buying, what they're doing throughout the day. So that's going to open up a lot of doors, not only geographically, like in Southeast Asia, which has a very similar demographic, but also for more things like car insurance, life insurance, things of that nature. So fundamentally speaking, that can be an incredible company. FNGR, Finger Motion. It has a 12 million float. 8 of the 12 million is locked up by insiders, so it has a very small free circulating float. A lot of people are just really interested on the short term, which is the squeeze, right? Everyone wants to just make money and get out. But I think long term it has a potential to be $100+ million company on the low end within the next 1 to 3 years. They are doing a deal currently with Pacific Life Re, which is a huge, I think it's a $10 billion insurance company. Munich Re, which is car insurance. And then also it's speculating that they said they have a multi-billion-dollar New York Stock Exchange insurance company that they're going to be partnering with or brokering the deal to allow them to insure every phone in China, which we believe is going to be AIZ or Assurant. So that's a really, really big deal. I mean, when I mean sole entity, sole provider, the only person that's going to be able to insure that. And the Chinese government really wants that. For GTII, real quick, basically the same thing short term. Everyone wants that big squeeze. 3 weeks ago, it was a penny stock that no one cared about. It traded 134,000 shares on a 3-month average. Now it's over $1 billion market cap, which I will admit is overvalued completely and fair. But it went from 60 cents all the way to 455, which was the original all-time high. And then it broke that and went to 897. And is now consolidating at that original all-time high. They wanted to do a digital security, which was a special dividend through the DTC and through FINRA. It got blocked, so they basically didn't allow them to do it, which raised the red flag in my eyes to say, okay, well, it's a company that doesn't trade, no institutional owners, really no activity. You look at a stock like AMC, it trades more than their 3-month average in the first minute candle. So that was strange to me. I think it's because they realized the supply circulating is way greater than the supply actually created. And we believe there's over 150 million plus shorts, just that we know on paper. So that's definitely a big deal. They merged with a law firm. All they have to do is just put pen to paper. They had an official auditor. I believe it was a government agent that has to come in and review the books. But they went from a company that doesn't earn anything, doesn't have any real employees, $0 they earn, just being honest, and now to merging with a company or owning a law firm that does 85 million in receivables. So that's going to be absolutely huge for them. 0 to say 50% of that 85 million, which is called 0 to 40 million, 0 to 50 million in cash. Huge fundamental jump for GTII. So 2 potential plays that I talked about that were incredible. The big kicker in both of them is that there are toxic lenders or predatory lending. So go ahead.
I wanted to ask you: Is FNGR, is that the one with Lind Global Fund involved?
Correct. Yes, Lind Partners.
So they got screwed. Lind Global Fund. That's why Comms got dumped. They had warrants in Comms. This is finger squeezed from like 60 cents to like $10, right?
Well, yeah, Finger IPO'd around $8-9. Then they ran it all the way to like $17, took it all the way down to like 20 or 30 cents.
Yeah,
and now it's back up.
Lind Global Fund. I didn't mean to interrupt you.
No, you're good.
I found this really interesting. Lind Global Fund got caught shorting. This is my theory. They got caught shorting against their position in FNGR, and what they did was when it popped, right, when it squeezed from 50 or whatever cents it was to $10 or wherever it is now, they started to have to liquidate warrants that they had in COMS and COMS, which went all the way down to like 4 or 5 cents. That's why I started loading COMS, because I knew the higher squeeze, the higher FNGR was going to squeeze, the lower COMS was going to go.
Oh, wow.
Liquidate COMS to cover. This is Lind Global Fund. I think it's Lind Global Fund is the name of these scumbags.
It's Lind. From my knowledge, it's Lind Partners. They're at a 444 Madison in the city.
So yeah, that's why COMS went down. The finger squeeze.
I'm looking at it. Wow.
The FNGR squeeze caused the COMS dump because they had to liquidate positions where they had warrants, and that's why I was soaking up COMS.
Interesting. That I did not know. That's why I was coming on here and saying, who knows where, like with the Kramers and the GTI, what else are they holding? What else? That's where we're trying to go after and try to look at that trade activity. That's crazy. They're toxic loans. They're basically lending them money, and then the companies don't realize. They're like, stop taking these convertible debt notes because they want the shares. That's the big thing. They kept shorting more and more and more as it went up to $2-3. Like a lot of their majority of their position was under $1. It makes you think, how the hell do they have the ability to keep going? Like, is it just purely a truly ending credit system that affords them to just leverage and spread their accounts out? I mean, it's crazy, but I didn't know that.
What I believe happens, and again, obviously, I'm not a professional. I'm just like everybody else on here, and I just have my theory. Lind, what they did was they're probably entitled to some kind of a warrant on FNGR, and what they do is with that position, they can short against it. So say you own 1 million shares, right? You already own them. You're entitled to them. So you keep shorting, and they'll let you short it because you are entitled to. So you just got to convert your warrants and be like, okay, well, I'll convert my warrants. Well, if the demand goes higher than what you're entitled to, and you have to cover your short, and you pull, you cash in your warrants, still not enough, et cetera, you get caught in a squeeze. So what do they start to do? They start to dump out all the other stuff that they have interest in, like COMS, and I don't know what other, I don't know what else they have in their, in their portfolio that they can liquidate to cover their short. But when I noticed, because COMS didn't make any sense to me. Why is this thing trading at 4 or 5 cents? It's absolute insanity. So when I looked at who was short, who could have been short, it was Lind Global Fund. So I started looking for stocks that were squeezing, that they were in. I said, boom, what do I see? FNGR. And then it all made sense. At least to me. I could be absolutely wrong. I don't know. But it made sense. So if we can find actually anything else that they have positions in that they're dumping, to cover their short,
you got it.
You can see a big move on the comeback.
You got it. Yeah, no, that's exactly what I'm trying to do right now, because these are not, big people. I try to tell guys, like, hey, I know you're so used to being like manipulated and mistreated because, the reality of the situation with the AMC and GameStop, they were the biggest plays. They were the most, sought after globally. There's never been a retail movement the way those stocks have. Look on StockTwits, look on any major page. There's just no following like those stocks. And to be honest, they did attract the biggest people in the game. They had your Ken Griffins and your, Steve Cohens. Those people, you don't want to fuck with them. And I hate to say it, I hate to be this guy. I'm not going to quit fighting, but I found a play that I believe is much smaller fish, more, people that are just, let's go after the worthless, companies that, are vulnerable. They're like prey. It's almost like schoolyard bullies. They don't pick on people their own size. They pick on people that are weaker than them. That's why I feel like these are so different. Is Lind Partners is in no way, shape, or form a Citadel. Is in no way, shape, or form a 0.72. They're just not. And even those guys got rocked. So eventually, just looking at the charts, I mean, technically, and I know when a stock squeezes, it's hard to just throw technicals and say it's technicals. Fibs definitely do play a part in this. Look at finger motion and look at GTI stock. They traded exactly identical. They ran up at the same time. The same 3 days they got attacked in sync, the 13th, the 14th, the 17th, which was the previous Thursday, Friday, and Monday. They bounced back both aggressively, and on Friday, they traded nearly identical. Finger motion was down 54 cents. GTI was down 47 cents. They both traded exactly 2 million shares. It was 2.01, 2.02, and had an identical red candle. So it's really interesting the way that they're moving. But actually, she posted this post I put, which is tomorrow. A truck is actually going out in front of CNBC and Lynn Partners. We're putting it in front of Lynn Partners. It's going to completely expose everything they've been doing, and that they've been, fraudulent against the company. It's going to be in Madison Avenue at 11:30 in the morning, and then it's also going to be in front of Fox Business at 8:30 a.m. Eastern. So we're going to advertise about GTI and finger motion stock, predatory lending, and toxic loans. But yeah, it's absolutely crazy how they're able to do this. And, they didn't stop. When it went from $1 to $2, they kept doubling down. 2 to 3, 4, 5, 6. They kept adding. It's almost like a gambler who's at the table and he thinks that he's going to break the dealer by just more and more and more and more. And eventually he's down 5, 6 grand. He's like, shit, I got to walk, I got to walk away. That's what I think is going to happen here. I think that, we saw a lot of bear raids and the bashers come out and sink, and I don't believe that happens for no reason. I mean, go put the stock side to side. They're completely different sectors. They should not be trading the same. But it also does remind me of what we saw before, right? Like AMC and GameStop. I hate to compare those two, but two different stocks, same ticker, right? It's really strange.
It's just the way it works. When they get caught in a situation, and Lynn Fund is a funder. They're not a hedge fund. They're not a institutional investor. They're a convertible note holder. And what we see, and because we can spot it. Why? Because we trade. Well, personally, I'll speak for myself. I grew up in the OTC, so I know exactly what a convertible a note looks like when it's converting, and how these funders take advantage of these smaller cap companies. Well, these guys got into bed with the big boys on the NASDAQ, and they thought they could do the same thing. And this is where it got them. You got to squeeze out of FNGR that, you can't really naked short it as much as you can with an OTC that is unregulated. And the OTC itself, when you look at probably 90% of it, it's probably all crap, right? But the other 10% that took a beating in this last, 12 to 18 months, some of these companies, their market caps are smaller than their revenues. And I think that that's absolute insanity. And when you have people that are still in the game, that are still trading, moving over to small caps and applying that knowledge, OTC traders, I think, are probably some of the best traders in the world, period. Because we know how to trade around, if you've survived, then you know how to trade around all of the manipulation, all of the bullshit. You know how to spot it. When naked short shares are being used, to create capitulation. It happens. And you see it on a lot of these small caps on the NASDAQ, and that's why it's easy for us to trade them and spot the moves. And a lot of these funders are going to get caught with their pants down because
absolutely.
They're used to playing with the OTC companies. They really can't do anything about it. I'm in one particular company that its revenue is just absolutely obscene compared to its market cap in this market. It's just sold all the way down. It's down like 90% from its high. And that's fine. I'll just keep buying more. I don't care. But one day, just like, FNGR, at some GTII, at some point, some of these smaller cap OTC companies are going to explode. They're going to explode. Because at some point, those shares need to be accounted for. You can only naked short sell enough stock. But once the demand comes and demand is strong, you're going to see, 1,000, 2,000% moves, and everybody's going to start screaming, "Oh, the OTC is back." Well, the OTC never changed. It's just It's time to pay the piper. You know,
Right. And people
not on
ask
all the
all the
companies.
time, how is that possible? But it's nakeds. You know, it's like you just said, it's nakeds. But the best thing is when you trap someone, when you really say, okay, I know exactly who you are and I know exactly what you're doing, and you have an educated shareholder base. That's why I say I don't want you to buy the stock. I don't want you to just copy me. I don't want you to ask me when to buy or sell. I want you to be able to tell me when you're going to sell. You should have a plan. That's the biggest thing. Is don't just follow the leader. Don't just follow Lou or me or anyone else that you look up to, whatever it might be. Know what you're getting yourself into. And when they're trapped because the OTC. What's so great about it? Yes, it is less regulated, but to a way that is an advantage because you can't hedge yourself. Besides just naked, selling and just, essentially borrowing something that you're not paying for, there's no way to hedge. There's no options chain. There's no halts. There's no nullifying that volatility on the way up. There's no way to buy back. The only way out is up. And that's the biggest thing is when you find a Kramer's or you find a Lynn Partners where you're like, once you get a whale, once you get people all on the same page and you can have an understanding like, okay, we know this play inside out. And now institutions, you're able to pitch it to them and say, hey, listen, look at what we have here. In the end of the day, Lynn Partners is not a Citadel. They're not a global fund that people are going to say, oh, man, we have to protect them. No, people would love to wipe these scumbags out. They would love it. They'd eat them right up. And that's the biggest thing here. Yes, I do think Finger being on the open market, it is a little, you can halt it. There are ways to mess with the stock, but there is no options, which is great. So once you trap them, you got them.
Yeah, once the stocks that squeeze the hardest are the ones without options, because there is no hedge, right? So you can short, and then you hedge your position with say you have $1 million in short, and then you throw $100,000 on long calls. So in case you get squeezed, you're hedged. You have an option hedge. When you have a stock, a small cap, right? Let's forget about the OTC for a second. When you have a small cap stock that does not offer options contracts, those stocks will squeeze the hardest because there absolutely is zero possibility for them to hedge against their short position. Period. Like there is no way to do it. You either go long, either cover. You have to. The only way out, like you said, the only way out is up, is by buying your shares back to cover, or you close. There's nothing to do. So when you have something like AMC, that squeezed, and they had options. GME had options. Those were more gamma squeezes because of the options. But the small cap stocks, if there's no options contracts, and there is a high short position, and the demand goes up, unexpectedly goes up, you've got yourself a short squeeze. And that's exactly why the OTC has gone to shit, because they're never held accountable. It's all naked short selling, and there is no T+3. OTC is like T+13, and if you get a failure to deliver, they don't care, et cetera, et cetera. It doesn't matter. So they just keep creating, new shares, capitulation. Shareholders get frustrated, they dump. That's just the way the OTC works, and you end up going from like a nickel to 0.005, and then that's where they cover. But at some point, that's gonna end. The SEC, just over the past few months, they started holding companies liable. LG Capital Fund, Adar Bays was another one. Alexander Dillon from GPL Ventures, because these guys were getting blocks, hundreds of millions of shares, blocks of shares, in exchange for their convertible debt, and they were dumping them into the market. Well, when you have that amount of stock, now you're a broker dealer, and they're not registered with the SEC as a broker dealer. I'm not too familiar with the legality of it.
Yes. No,
right?
you got it. That's actually what the Kramers got charged for is unregistered lending and toxic lending, because they just did deals with, like, say they went and they did a deal with the company where they lent them money and they said, all right, well, we'll convert, let's say, 2 million shares. They weren't allowed to do that. That was brokered behind the scenes. That wasn't publicly filed. They did that, and then they went into the open market the next day, dumped it, and made $20 million. And the SEC's like, whoa, hold on. what the fuck was this? You didn't even file this. You this wasn't even
Correct.
registered, and that's why they kept getting caught.
Unregistered
slap
sale,
a fine on them.
something like that, and they're not a registered broker dealer. So it's actually a very black and white process, right? But a lot of these convertible lenders, they got caught with their pants down, and that's what caused ILUS to pop from its initial dump last year when Dylan and his guys at GPL Ventures got pinched. I don't know exactly what happened. Did they try to buy the shares back or whatnot? But ILUS ran from 6 cents to 50 something cents or 40 something cents. One by one, 8R Bays, they got pinched. They had to turn some shares back in, to the company. Those days are coming to an end. The usury laws in New York, because a lot of these lenders operate out of New York and the Southern District of New York and the Supreme Court of New York, they're starting to say, you guys can't be converting stock like this. Like, this is not acceptable. This is illegal. It's toxic. It goes over, I think the number is 25%. Like, you loan the company $100,000, but then you convert and then you make, $1 million on your conversion of the notes by selling shares. That's 1,000% interest. That's not 25% interest.
Yeah, you can convert. So here's a lot of the loan agreements is you can convert on the average of the 3 lowest trading days over the past 10 days. That's what they do a lot. That's a lot of the note agreements. But the big thing is they can't get help, because if they go, like, say they call anyone up and they're like, hey, we need money, it's always between them. It's like the Kramers and the Alpine. It's always the deal with the prime broker that they've had. But now their prime brokers are getting fucked, because in the end, you have an LLC and you blow it up, right? Say GTI squeezes to 50 or 100, whatever people want, right? And it blows the Kramers out. There's no way they're putting up 500 million or $1 billion, right? They're just going to file bankruptcy, move on to another LLC. The prime gets fucked. So that's why now there has to be tightening. They actually called the company. The guy who works for GTI called the company and wanted to buy shares back. He's an idiot. Left a voicemail. So that's how crazy these guys are, where if they can't go anywhere to get help, the second you need money, they're going to say, all right, how many shares you short? Imagine someone calls you up and you're working at a trade desk and like, yeah, we're thinking about, we need like $10 million. Now, all right, how many shares you got short? We got about 400 or 500 million short. You look at the stock, you're all right, yeah, let me get back to you. What's the first thing you're going to do? And when you find that information out?
There's only one thing you can do. Is number one, you call.
You're going to go tell every friend in the world
right.
to buy the stock.
Well, there's that, right?
Yeah.
There's that. That's unspoken. But then what these guys do is they call the company and they say, hey, issue stock. We need you to issue stock. And if these CEOs, right, if you're short, what happens is, let's say ticker ABCD, right? Let's just use a basic example. And this happens. Ticker ABCD, they're short 100 million shares. They will call the company and say, hey, we need you to issue a note, or we need you to issue shares, or we need you to do something. If these CEOs take a stand and stop issuing shares or stop issuing these convertible debentures that allow them to short against their note, the OTC is back in 2 weeks. Done. Bull run.
You got it. But they don't realize. They don't realize it's predatory.
Some of them do. And a lot of these, there's that attorney, securities attorney. He was actually on here a few weeks ago.
Yeah, I can get him back on if we
Smart.
need to.
The OTC lawyers?
Yeah, he's a beast.
Okay, he's actually going after the Kramers for RICO.
Yeah, he is a beast. And if people need to follow him and read the court cases that he is sharing, because that is where a lot of the information, people listen to people, they listen to these spaces and they hear people that have a little bit of knowledge, talk, and they're like, whoa, how do these guys know, et cetera. Go read it. It's there, slow market day, go to OTC lawyers, go to their Twitter, all the cases, all of the cases there, the litigation is there. They smoked 8R Bays. And a lot of the law, a lot of the precedent for these toxic lenders was set in their case against 8R Bays.
For anyone listening, I tagged the OTC lawyers' main Twitter They have a poll up right now, so I just tagged that. It's SEC. It's security attorneys. Mark Basil is the head of it, but this is the corporate account. I can post Mark's on there too.
Yeah, he's no joke. That man he knows the law, he knows security law. He smoked a lot of these lenders in the Southern District of New York in the court. He took some of these guys to the Supreme Court and smoked them.
That's awesome.
Yeah,
that's great.
Ton of good information there for people.
Currently in a lawsuit with Twitter for DPLS as well. I tagged his post. Oh, I tagged the wrong post, but he's working with them right now too, which was on the Kramer list.
Wow, yeah. Well, that's the thing. These companies, they're getting smart now. The CEOs are realizing, holy shit, some of them really don't know. That's the thing. Like, what you could look at medical companies, IMMX, they got destroyed. Bluebird stock, incredible. CVM, they just got a breakthrough in phase 3 clinical data, extended life 6 to 12 months in head and neck cancer. If you could live 6 to 12 more months and it was a financial thing, would you do anything you can to get the money? Some people would kill for another 6 to 12 months, and these companies are destroyed. It doesn't matter. You could be the strongest fundamental company. Naked shorts want the stock to die. It'll die. So now they're realizing, oh shit, our stock we're a victim of this. And now they're starting to smarten up, and they're going to guys like Mark, and you see VNUE, HPIL. And when you look in the readings, I did a ton of reading. I spent hours on this, digging through Mark's stuff and OTC lawyers. They sold 5.4 billion shares of VNUE. Go look at the ticker. Absolutely murked VNUE. And they had no idea it was happening behind the scenes. No idea. They're like,
and the company
we don't get it.
Blamed. And the company gets blamed, and they say, well, the company's diluting. Well, the company made a mistake by getting into bed with these lenders, but that's all that there was when it came to lending, for a lot of these OTC companies.
They needed it.
Well, there was no other way. There was no S1s and Reg A's. They were very rare. It was all convertible debenture, all of it. Just take a note for $100,000. Take a note for $200,000. Take a note.
Is that always how it is for OTC?
Well, that's how it was.
Okay.
That's how it was. But recently now you're seeing Reg A's where you're just selling directly to the market, and that destroyed a lot of the stocks. But once these faucets get turned off, perfect example, XCPL, right? It was 60 cents. It went all the way down to like 002, but they're at the end of it, right? So now this is where you buy. When you know the faucet is coming off, you know that the company is funded. There's no convertible debenture left, right? This is where you buy it. And this is where the OTC is right now. The OTC got diluted down to shit, not just that one particular ticker. All of them. Another fantastic, like an absolutely gem of a company. And I'm not trying to pump it at all. Everybody knows
XCPL. XCPL. Okay.
That's one. Yeah, that's one that I just recently got into last week. But there's a ticker INTK, right? They got diluted down to shit, and it wasn't even convertible notes. It was restricted stock becoming unrestricted. People wanted to cash out. They cashed out. You toss in the crap market that we've been in, and the stock took a beating from just over a nickel all the way down to 006, almost in the 50s. Their revenues are going to surpass their market cap very, very soon. They haven't released their quarter 3 financials yet. I'm not telling anybody to buy it, but at 005, 006, yeah, it's a joke. It's a joke. A lot of these companies, this is the opportunity now in the OTC to get in at the bottom on a lot of good play.
Well, that's the problem with a lot of investors is and again, I'm same as you. I'm not telling you to buy a stock. I want you to know what you own. I want you to confidently say, I'm going to be a part of this before. Don't just take my word for it. But when I saw GTI, I looked, I said, okay, the SEC blocked it. They had the convertible note. They paid it off. It's a fact. They're not going bankrupt now. Now they're trapped. They call the company. They want to buy the shares back. The company tells you, go kick rocks. I'm like, let's go. And I got it right at 45. I think my first buy was at like 45, 50 cents, 60 cents. So a lot of people, yes, everyone thinks the stock's going to the moon. I understand that. And, rightfully so. When you're holding at 50 cents, it goes to 5, 6, 7, 8, almost 9. You're thinking, holy shit, this might go to 10 or 20. So, some people, they really don't want to buy when, like you said, like they don't want to buy at the bottom when no one believes in it, when the company's getting killed. But that's what you're supposed to do when no one's talking about it. I was buying it when they were trading 100,000 shares a day. That's like XGPL. I'm looking at it and I'm saying, hey, let me do research. Let me look into it. But right now, I saw it just hit an all-time company low 5 trading days ago at 001. It's at 003, which is, like you said, probably a joke. How many people here will actually seriously go and research and look into it? Not many, but I guarantee if it blows to 1 or 2 cents and it runs a couple 100%, people will then start to buy it. But right, that's always the mindset, is they want to buy it when it's hot. Buy it when no one cares about it.
It's the mindset, but it's also, at the same time, right? In all fairness, you want verification, right? Like, you don't want to buy it. You don't want to buy it at, a half a penny or 006 or whatever the number might be. And then it comes back down to 001, because that's been what's been going on with this dilution. People are getting bagged. And so I get that, it's protection of capital. You want confirmation that, hey, wait a minute, the faucet is off. Holy shit, this company is moving. There is no longer an X factor of getting, screwed by dilution or by, naked shorting, et cetera, et cetera. Catalysts are hitting. And this is the thing. I feel terrible. I pumped INTK from 4 cents down to 005 because those restricted shares were still converting. And that no matter what happens, when you got unlimited shares on the ask, the stock is going to keep going down. But once that stock actually stops, once that faucet is off, and I expect it to be within the next, couple of weeks, maybe next month, I don't know, right? But once it's off and then that stock actually has a confirmed reversal, that's when people want to buy. And that's kind of, I don't blame people for that. I'd rather chase something that I know is a confirmed reversal and pay the premium than buy something and then watch it continue to like trade sideways or go down. But GTII, for example, that was a confirmed reversal. Like, that was it. They shut the faucet off. The shares were out there. It was time to, move forward. And then there was no shares for them. They wanted to buy that stock back. It wasn't coming. The CEO said, no, kick rocks. And then boom, you got a 10 bagger. And that's going to happen on a lot of these companies, not just the OTC, a lot of these NASDAQ companies. That's why, you have these small penny stocks. One went from I think it was like, I don't know, it was a nickel to like a buck. I forgot what it was. Not FNHC, or I forgot the ticker. It's a confirmed, that's it. The faucet came off. The stock is way oversold. Any small catalyst moons it. It's a 10 bagger, 20 bagger, whatever it may be. That's where we are right now in this market. Small cap, my OTC, even mid cap, and even some of the larger NASDAQ stocks like AFRM or
Yeah, I'll second that, Scalp. Like I've seen trading stocks, I've seen some volume just dry up on a stock. Management owns a lot of positions, and when you want to buy it back up, right? When you said something very interesting, right? Sometimes they use, I don't know what stock you were mentioning, but when the revenue is higher than the market cap, right? That's a great indicator. There's a lot of these companies that on a bad day, low volume, their market cap's going to get crushed, and it's going to go underneath their revenue. And in that case, if management has any half a brain, they're going to buy it. If shareholders that are long have half a brain, they're going to buy it up, and it's going to freeze the market out, and the volume's going to dry up. But when you want to buy it, they're going to have to hit that, that bid, and the low volume is going to lead to large price action there. So I've seen that happen.
That's what we're looking for, and that's where we are. That's where
that's the opportunity.
This is the opportunity, This is where, and this is where a lot of money gets made. I was in NAKD, ran to 350, 330 or something, and I literally sold over 3. Like, that was the greatest gain in my life.
Well, the best thing about OTC and a lot of people that reach out is like, hey, I don't have a ton of capital. I was like, great, that's even more of an incentive. You get a 50-cent stock, goes up a point or two. It's huge, 200-300%. You can't go in, and I don't care who you are. You got millions of shares to short. You can't go do that on Tesla unless you're fucking Bill Gates. You can't go trade those stocks unless you got huge money. You can't buy a million shares of them. But with OTC, it's huge. There's so much opportunity if you just do some digging and you're a little patient. Because I you mentioned this before. People say OTC is dead. It's never been dead. It's just you got to know where to look. I see a lot of these
No, it's
companies.
nowhere near that.
No, not even close. I see all these companies where they're like on the brink of survival. Like you see a Root, ROT, AVCT, what was it? SNDL. They do all these reverse splits. That's actually the worst thing. Anytime MNDM, Mind Medicine, anytime they do those reverse splits, I wanted to ask you about that. I always see them get destroyed. Every single time a reverse split happens, company gets rocked all the way back down. What are your thoughts on that?
On the reverse split in the OTC?
It doesn't even have to be OTC, but I notice a lot of these companies that are like, they're really, failing to meet the minimum requirement on the exchange, and they reverse split, and then the stock just gets killed all the way back down. Like shorts just have a field day on it.
Well, it's two different mentalities, right? So, like recently in the small caps, if the reverse split is so massive, like what was that one that did really well? They split it. The float was like
NRBO.
One was like AVCT, like 15s to 1 or greater, 20
no.
to 1.
There was one that was like 50 to 1, and then the stock ran like 700%. ATXI. It was I'm the one.
ATXI, NRBO,
Right.
a few others.
That a big catalyst of that is how many inside holders are holding on to it, and what kind of round of financing is coming after a reverse split. Because if they're reverse splitting the stock, it's probably because they want to wipe out shareholders and tighten up the float. And if they're getting a good round of good financing, there's upside. They want that control when they invest into the company. So I think that plays a part in it too, not just retail, right? That when they reverse split it, if management's thinking, okay, we need to keep price action going, or we have a potential private placement there, then they want to know, right, that the guy who's putting in the money, the investor on the private placement side, wants to know, hey, is my investment secure here? Can I run this stock up, for lack of a better word, because they're going to come in with liquidity as well. They're going to come in with extra capital and tighten up that float to secure their investment.
Absolutely. And the thing is, with the OTC, on the OTC end, every time, and this has been for anybody that's been trading OTC, I don't even want to say vets, right? Anybody that's been trading OTC for more than a year or 6 months knows that when an OTC company generally does a reverse split, they do it to dilute more convertible debt, right? So in the OTC, a reverse split kind of sucks, because the 99% of the time it's because they fucked up and they're going to continue to fuck up, like RNVA, for example. If they do a reverse split, no one's going to buy it. They're going to reverse split it to 10 cents, and then they're going to dilute it back down to 0001 and no bid.
Right.
And that's the reputation that the OTC companies have because of the convertible notes. Now, the small cap companies, they're a little bit different. They do a reverse split to maintain NASDAQ listing requirements of $1, and then they eliminate their float to like $1 million or below, or a couple of million and below. How much can they short it at that point? Especially if there's no warrants being converted. They can't. At some point, buying pressure comes in, you get a short squeeze. There's just nothing you can do about it. In an OTC company, you do a reverse split, they start converting out more debt. There is no short squeeze because there is no force to cover. There just isn't. Are they supposed to be forced to cover? Yes.
I would agree with that 90% of the time, but I would say 10% of the time, and that's the job of an investor, to find that gem, right? When they are reversing, they're planning on an uplift, right? They're cleaning things up.
I'll tell you this: if a good OTC company decides, and I know that it's a good OTC company, decides to reverse split, and I know it's not because they have to convert out another note, I'm going to buy that blood. I will absolutely buy that. Absolutely.
I just posted in the chat here, there was a Wall Street Journal article that just dropped, and it's funny because we're talking about it. Venture capital firms are jumping into the stock market, buying up battered shares, publicly traded tech companies when they're investing less in startups. So it's interesting because now I think we're realizing how big of a shift we're seeing in the market as a whole, to where we went from, getting a lot of money, having a 25 million new investors come into the market, which was, higher than the last 10 years combined, getting all this money, juice and everything, pumping. And now finally it's been so destroyed and shorted and battered, as the article says. Now they're looking like, forget the IPOs and all that. We're going to now eat eat the dips on all these. And there's a lot of really, really good companies. You even said it, how is the market cap lower than the revenue? Like, it's clear and obvious. And now I think big boys are starting to see that, and they're playing the game as well.
Well, you have market caps that are lower than cash on hand in some of these, not in the OTC necessarily, but definitely in the NASDAQ, in the small cap space in the NASDAQ, you have stocks that got battered. These guys have raised the funds. I mean, I've talked to a few NASDAQ CEOs that are like, yeah, I feel bad for shareholders, but I got 15 million in the bank, so I have a 3-year runway. What happens with the stock happens with the stock. And they also know that, hey, if it gets too low, 2 million will buy this whole thing back, and I'm sitting on $13 million in the bank of a privately owned company. So there's plays there. I'll give an example in a second. I'm having a loss for words, but there's who's the guy that does the buyouts in New York City? They got a racetrack on his name. The name will come to me. This guy was he would just wait for situations like this where the market cap was lower. He'd buy the shares cheap, and then when management wanted to buy the remaining 1% of the float, he'd hold out. And the stock would be trading at $5, and he'd be like, "No, I want 35."
Yeah,
And they're like, "You're crazy." They're like, "You're crazy." So, I'm missing his name. Carl Icahn.
Yeah.
Carl Icahn, right? So Icahn, if you look him up, that's what he did. That's what he was famous for. He'd sit there, smell blood in the water. You're going to issue a share buyback or like the Twitter deal, and that would be a perfect deal for him, right? Hey, Elon says he's going to buy it at 56. It's 40, whatever. I don't know the numbers on Twitter, and then he goes on a campaign like Elon better buy it. He better buy it, and we should raise the price. We think it's worth more, and he makes $10 a share on a 6-month arbitrage.
And that works with
crazy.
Any market with its small cap, mid cap, large cap, OTC, et cetera, et cetera.
Well, I think in OTC it's getting even more prevalent. Like I've said this before in this space. I think the OTC is the new Silicon Valley. Like the progression for those that haven't been here that long, like OTC is still relatively new. Like Pink Sheets LLC was the predecessor to OTC, and it's kind of formulating the regulatory body around the OTC. And what we're seeing now, as crazy as we may think it's a shit show, it's actually a lot better, like 100 times better than what it was 5-10 years ago. And I think that when you have billions of dollars going to private equity deals in Silicon Valley that had to wait for an IPO, and then you have basically shell corporations or companies that have liquidity already with revenue, and the liquidity is there, and they know that they can buy the float and increase the valuations just like they did in the private sector. I think more money will flow in. As we've seen more money come in, I think more money will continue to come in.
It's black and white. I have a company, right? I don't care. Let's say I'm not publicly traded. I have a private company, and I'm doing $10 million in revs, and I've got a groundbreaking product, right? Somebody comes in, PE, private equity comes in. They say, hey, listen, I want a piece of this. You need capital. Give me 30%. I'll pay you $3 million in cash. You can use that cash to grow the company. And I say, okay, let's go. Let's get it. And they give me my $3 million, and I give them, 30% of my stock. Private transaction. I'm not publicly traded. And then the company blows up, and these guys are in on the ground floor. And then we IPO, we go public, and these guys make billions of dollars, right? That's how it works. The OTC is essentially the same thing. These small caps are essentially the same thing. If you can pick the winners and buy your position, if the company doesn't have a lot of debt, they don't have any convertible notes, or it's very minimal, right? They did a little Reg A or an S1, and they raised the dough that they wanted to raise, and you buy in. Some of these heavy hitters will see the opportunity. They'll come in and they'll buy up the float on the open market, and you'll start seeing 13Gs drop, 13Ds drop in some of these smaller cap companies, including the OTC, but you have to find them. That's the issue. And trying to find them through all the, the mess that we're currently in right now, because you have residual garbage, left over from the change last year. It takes time. But if you're not in the market and you're not paying attention and you're not, trying to study what's going on around you, you're going to miss massive opportunity. That's
XCPL had a 13G, 25 million shares, about like 7% of the company.
Oh, perfect example. Well, I can't believe that missed, that slipped my mind. Who files a 13G that's not a note holder? Nobody in the OTC. Nobody. There's no 13Gs filed in a lot of these companies, but they're going to start.
I rarely see a 13G filed with any OTC.
The only people that used to do it was LG Capital Fund because they were issued 10% of the OS in exchange for a convertible note. And I used to see people talk about it like, oh, 13G was filed by, this fund. I'm like, yeah, that's a note holder. And they were issued too much stock, so they have to file a 13G. It wasn't, an investor. XCPL is actually the opposite. That was an investor that came in and bought a massive block and is holding it. Huge difference. And we're going to start seeing that more and more often.
Well, and you're going to see it when a guy, there's guys out there, and I've experienced this in my role at an OTC where, you get a call from a guy who slapped $200,000 on a company without even calling you, or the minimal due diligence, right? And you start realizing, hey, there's guys out there with $1 million that'll put a $500,000 private placement into the company and then slap the thing all the way up because they're betting on themselves, right? They're securing their investment. So it's out there, man.
Yeah, it's out there. And I think it's going to become more and more prevalent because the retail traders, us, you, me, whoever else is trading, whoever else survived, the last 18 months, we are becoming better at spotting the difference between, a bullshit pump, or a bullshit, a story and a company where hey, this is something, you might want to go long in. I'm not saying everything's a long. Right. There's Momo Trader. I trade momentum. I trade, et cetera, et cetera, et cetera. But some of these companies are going to surprise a lot of people. They're going to go from low dubs or low pennies or 50 cents or whatever up to, 20, 30, 40, 50, 100x from where they are because they're legit. It's just that simple. They're legit. And people with the money to back these companies are going to take advantage.
Well, I'll tell you, I'll give you guys a story just on the background of the OTC I come in. You guys can check my profile. I'm not going to name it. But when I got there, it was interesting. They're a real company, right? So, and I've been in the OTC a long time. I've seen offices with a guy who rented an office. He hung up his wife's picture on the wall, and he's an OTC company for the day, right? And then when you leave, there's no business there. But what's interesting is not only do you not need a big backer, because there's always a potential for that when it's a real company, right? But when you have a real company, there's real people there. And when there's real people there, those companies are harder to kill off, right? So like if you'll see a fly-by-night CEO come on the OTC, start a company, I'm doing a Reg A, he doesn't raise the money, the thing delists. It's gone. Like you don't see it again. Meanwhile, the guy who had, 3 stores in Florida or, a business in, Northern California with 20 employees that list, it's hard to kill that guy. And he has a lot of friends that are going to bail him out. So I've seen, those businesses, and I'm a long holder. Just a pure disclaimer. I don't trade. I made my money long holding, so I stick to what I know. And I think there's a high, if you hold any stock in the OTC for 7 years and it survives, there's a high probability that it's just going to run, even for no reason. So I'm just long on everything. But I've realized that if you can get into those companies that have real people behind it, and they don't care if it's the OTC or not, they're going to make their business work. They're just harder to kill, right? You can't promise a return, but over time, the financial mechanics and financial mathematics of it kind of work out. If you bought a low flow, it's not, they're not shitting all over the place with stock all the time, and they're not taking in toxic financing all the time, or bridge financing. I think people get those two confused. But yeah, man, they're out there, and I like the ones that have strong management and there's real people there. If there's a group of people there, I get excited about it because I'm like, the chances of this thing dying off are hard because there's 20, 30 people here that are incentivized to keep this thing alive.
You mentioned Icon a minute ago, and it sparked this interesting story that I had. I don't know if you guys have heard of the feud between him and Ackman on Herbalife. So that was basically like, in a way, a swing and dip contest where Ackman wanted to keep shorting, and Icon's like, this fucking guy wants to short, let's go. And they just kept throwing money at it. Who's going to win? In the end, obviously, Ackman lost. But I thought that was a really funny story where it's like you have a lot of guys in the market now where these companies are actually fundamentally strong. And you even see great companies where really the goal is to bash them, to acquire them lower. Like we saw, there was a company out of South Carolina called Force Protection Company, and they made MRAP vehicles. So basically like anti-mine resistant vehicles, which is for IED blast. And it had like 100% success rate. and they come out of the woodwork, bashing the stock, killing the stock, naked shorting it. Little do you know, GD, General Dynamics, acquires it for $5 a share, up from 35. And you see the same exact thing with all these other companies. Dendrione was a company that got killed. They were, I think, a cancer research company, but not all the time are they bad companies. You know, Andrew Left did it.
No, you should. Yeah, I'll double down that. What do you call it? Michael Dell, Michael Dell's book, Play Nice But Win. He has a whole chapter on him and Icon. And Icon was Dell wanted to take Dell public. I mean Dell private. It was public, and he felt like the stockholders didn't believe in him because the stock was down. That's what he said, right? And he wanted to take it private, so he worked a deal with a capital group to buy Dell back to take it private. And in the midst of trying to take it private, Icon bought up a bunch of shares and then started issuing all this crazy PR. He got on the news stations and was like, what do you call it? Dell is valued at more. It should be worth more. Michael Dell's trying to steal this from us, right? And just so he can get that 6-month arbitrage. Wild.
Well, there was one really cool story about Dole Food, and I just did a video on it. I posted it where the shareholder, he was the largest shareholder, CEO of the company. He took it private, and this is more of an anomaly, but the shareholders actually came together, filed a class action lawsuit, and said, "Hey, we felt like you sandbagged the company to take it private," and they actually won. And they had to get paid out an additional $274 a share. And what they
want to see an
realized is they
example of
had
that
to
in the
do a
OTC?
real audit. They
In
found
the
that there was
OTC?
13 million discrepancy between the float of 36 million, and the lawyers did a real tag on it, and it was 49 million that came back. And no one knew where those 13 million shares were. And they took it for $13 a share private. So that was like 130 plus million gone, stolen, that no one ever found out. Matt Levine wrote the article, and no one ever found out.
Well, that happens now, believe it or not. There's a character to remain nameless that's definitely on FinTwit, and he's CEO of 4 companies, and that's his MO, right? He goes and I don't know if you study corporate law, like you have to have an annual shareholders meeting, right? There's certain things that a corporation has to do, like by state charter, right? So if you're in Delaware, you got to follow Delaware and Nevada, but usually there's like things like you have to have a disclosure of your financials. You have to give it to shareholders on request. You have to have an annual shareholders meeting. So if you don't have this, like a lot of these OTC companies, they haven't issued a PR in 2 years, like they're not in compliant with state regulation. Now most people don't care because you're an investor. But if you're a wily businessman, you say, "Oh, you didn't file your shareholders here? I got 1 million shares here. I'm going to sue you to take control of the company," right? And now they go through the court and they end up getting custodianship, right? You guys have seen, I'm sure some of you guys on FinTwit have seen these custodian battles, right? And they take the company. Now, think about it. Even if the company does nothing, a shell, an OTC shell can sell anywhere from 200,000, 100,000 for a really dirty shell with a lot of debt to 500, $1 million if it's super clean, $1 million, $1.5 million if it's on the QB. So think about that for a win, right? So 5,000 in lawyer fees and, an initial upfront investment of 10,000 in the stock. And now you own the whole shell. What kind of return is that?
We actually had a guy come on Spaces one time. I don't know if you remember, Nick. He said he owned like X amount of this company and was hoping to actually do that exact thing.
No, it happens all the time. A lot of these custodian deals that you're seeing where they're like, we're custodians, that's what they did. They bought a position, the stock went down, and then they sued them for breach of fiduciary duty, right? So as an executive, if you're a CEO or a board member, you have a fiduciary duty to your shareholders, right? To do the right thing by your shareholders. And it starts with all these normal things like filing disclosures and having annual meetings and, disclosures. There's a lot of disclosures. SEC regulations almost all revolves around disclosure and investor protection. But that's what they're doing. And they're waiting for a breach of that. And then they're going, "Oh, no, wait a second. You didn't disclose that. Wait a second. That financing wasn't in the best interest of shareholders." And
that's a lot of times too, speaking of that, why you see poison pills, why you see some financing.
Yeah.
If you look at the filings, there are a certain restricted class of shares where if for some reason they want to exercise it, it's going to turn into a 50 billion authorized share and all these notes explode.
And
So that,
no, I don't want to encourage this, but if you want to do that, don't go after a CEO that's active, because to Tigris's point, he is going to have a poison pill. You probably want to go after a defunct, like Chinese or foreign company that's no longer reporting, doesn't have any legal representation in the U.S. And that's where a lot of those deals happen. Like I remember 10 years back, there was a sweep of the Chinese. It seems like every 10 years they sweep the Chinese companies for fraud or bad accounting or not reporting the right way, and they sweep a bunch of them out. And last time it happened, a lot of guys came in and took custodianship of those shells, because basically the foreign entity that owned them was like, no thanks, I'm good. I'm gonna wash my hands.
Hey, Sean, not to cut you off there. I have one question for you guys. That last guy that was speaking, that was talking about the OTC market, it was about 10 minutes ago. He said this thing that caught my ears a little bit. Maybe you guys can clear it up for me. He said that Finger has less of a chance of being manipulated than an unregulated OTC market. So, what did that mean? Because isn't Finger? I know Finger has no options, and GTI has no options, and there's no halts. So how can Finger be less chance of being manipulated than an OTC stock? That's my question.
I don't remember who said that. I don't know if I don't think I
It
said
was
that.
Scalp It.
Here's the thing. Now everything is just nothing is 100%, right? But when you have a stock that has options, like let's say I'm short $10 million on Tesla, and I want to hedge myself. I want to protect my short. I buy $1 million worth of calls. So if Tesla squeezes, I'm getting squeezed on my short position, but I'm also making money on my calls. So I'm net even on my short position. I'm able to hedge because it has options. So when you have a stock, and that will encourage me, or at least prevent me from worrying about covering my short, because even if it squeezes, I'm still making, I'm losing less money because my calls are going through the roof, right? So my loss is minimal, maybe a 5% loss or a 10% loss. When you have a stock that does not have options, and I have a $10 million short position, and I can't buy calls to hedge my position, and the stock squeezes, now I'm in trouble. So it's easier to short squeeze a stock that does not have options than one that does. Now, when it comes to the difference between a small cap NASDAQ and an OTC, well, in NASDAQ, you have something that is regulated called a failure to deliver. If I'm short FNGR, right, and this was specific to your question. If I'm short FNGR and I say I sell 30,000 shares short on FNGR, and I'm retail, and the stock goes up $10, $20, and now I'm negative $150,000 on my trade, my broker can margin call me and sell every position I have in my portfolio and put a lien on my house to cover my short in that stock, right? I have to cover. Now, in an OTC company, retail is not shorting. Market makers are shorting. Market makers are making a market. They're trying to maintain a stable price in a stock. And if the algo is set on a downtrend, a market maker will sell 1 million shares at a penny that they don't have. And retail traders, because it's all retail in OTC, there's very, very little institutional, if any, trading in the OTC. It's mostly retail. They'll sell 1 million shares, 10 million shares, 100 million shares at a penny. People give up, and then they sell for 009, they sell for 008, and it keeps going all the way down. And at some point, if the market maker decides that they want to cover, they cover with like a 90%, swing difference. So they're up 1,000% on their short, right? That's the difference, that it's not retail that's shorting OTC. If you hear about shorts, well, we got the shorts trapped on this OTC. You can trap shorts on an OTC, but the shorts that you're trapping 9 times out of 10 or 9.999 times out of 10 are market makers. It's not other retail traders. Very, very rare you're going to have retail shorting OTC. Like it's just not. I'd like to meet somebody that said that they're short an OTC stock. I haven't met somebody.
My
Well,
and my
that's
last
the funny part is I saw Tim Sykes and those guys that bear rated the stock, and you can't borrow it anywhere else. So you're sitting there and you're like, how the fuck did you take the stock from 9 to 380 in one day? How is that
and
possible?
and
It was also
my
it was all market makers.
My last question is so, like you said, but what you just explained about the calls on Finger and being on the NASDAQ and the OTC being the GTII, can't they do dark pools and the order flow delay and all that with the NASDAQ, and they can't do that with OTC? Can they still do the same thing in OTC, delay orders and all that stuff? Because the
Yes.
failure to delivers, even though it's a rule and it's law, they never cover them. And if the failure to deliver stack up as much as they do, they just do what they did with SNDL, GameStop, AMC, and just create some kind of special dividend and get rid of it. You know what I mean?
Yeah. They do that. See, the thing is with the OTC is that there's really no, and this is going to change. As of last year, they're regulating a lot more. They're cracking down on these convertible note holders that short against their position, et cetera, et cetera. That we haven't changed yet, but we're in the process of changing the OTC to trade more like small caps. The thing is, on NASDAQ stocks, you have more money that goes in there where you can't ignore it. You have a company like Comms, right, that was sitting at 5 cents that traded 500 million shares in one day when it went from 4 cents to 17 cents, I think was the high. 500 million shares at average of 10 cents a share. That's $50 million. You're never going to see a $50 million day in an OTC. Like, that's the kind of money that you can't ignore, that shorts can't ignore, that regulators can't ignore. In the OTC, you have a stock that does $500,000 in a day, and it had a good day. When you have a stock that does $1 million in volume, a pink sheet that does $1 million in volume in a day, it's massive, or 2 million. It's massive. That's a big deal. But that's not enough money for them to actually come around and say, hey, you have a failure to deliver. Nobody cares because market makers continue to short. They'll naked short. They'll sell shares that don't exist. They don't have to borrow. That's the thing. That's the difference. Market makers do not have to borrow shares in the OTC to sell them to you. They can sell you shares that don't exist. If you take an OTC company that has a lot of volume, let's say there's 100 million shares outstanding, and you totaled up all the number of shares in retail accounts, maybe there's 200 million shares being held. It's like, a 100%, it's double. The outstanding share count is double, in people's accounts than actually exist in the company. And there's no way to prove that.
So I just want to say one thing on to add on to you. So if you're having now, and this is, everyone's, individualized based on their account and their settings. It's not everybody that is in TD or Fidelity, but when you see sometimes when you get these big transfers, and the TD Ameritrade will come and say, hey, well, we can't accept your transfer of GTI shares because we're not able to verify its validity or something like that. Now you get into the point where you're looking at it and you're saying, okay, is that true that, it's very possible you have an IOU sitting in your account? And I would advocate to say, yeah. I'd say, yeah, the odds are with most stock, that's heavily traded like that. Would you say it's just a crazy amount of money coming through the OTC? The odds are is there's more shares in the retail account than there really should be.
Absolutely.
And also with the borrow rates, I see this is also, again, individualized, not every person, but I know that there are some big whales in both of these Finger and GTI where the brokers are reaching out and saying, hey, we'll pay you 90% or we'll pay you $240,000 a month just to borrow your shares and lock them up. So that's another thing that comes in my head. And I say, okay, well, why wouldn't they just go and buy the stock at market? Because what would that do? It would almost be like slitting the throat of someone that's short. You rather borrow it because then you don't have to buy it. The same thing as like doing an off exchange, transfer. You don't actually have any shares hitting the market. So those are little things I think about when it comes to the play. I'm like, okay, they want to borrow. They're going to pay you a crazy amount. You're going to transfer. They're telling you no because we can't verify validity. It's like, obviously there's something wrong behind the scenes.
It's dark, man. They take advantage of retail because it's all retail, and this whole thing of retail, what's the word, coming together on a stock. And in the end, OTC, a lot of retail traders, we trade for our families, we trade for our house bills, we trade for, how long can you hold out? And the market makers know that, and they've known it for decades in the pink sheets, that if they continue to naked short, this price is just going to come down. Look at any chart in the OTC, it just happens. You can't do it with Apple because you got guys like Warren Buffett will come in and buy 100 million, more shares. He's got that kind of money to support the stock. Retail in the pink sheets do not, generally speaking, have that kind of money to hold up an entire market cap of a pink sheet stock. Period. It's not going to happen. The market makers know that, and they continue to sell air shares. I call them air shares, which is basically shares that don't exist, to bring the stock down, and then eventually they'll cover it, where they know the demand, that's it. This is the floor. The demand is here at this point. They'll cover it. And that's when you see these massive rips. But it'll be after someone's lost, 80% of their initial investment. And then they'll short it at each resistance line on the way up. And they'll just continue to do that and churn out shares that don't exist. Eventually the stock sits at 0001 or no bid, and they can, they're up 99.99% on their investment. It's just the way it is. That's the problem with the pink sheets. But little by little, it's going to turn. It has to. The SEC sees what happened last year. They see that there can be real money that pours into the OTC, no different than pours into the small cap in the NASDAQs. And so
I think we're not the darkest platform either anymore, right? Because the pink sheets was historically the dark pool, right? And then the gray sheets, right? But I think now with the crypto and NFTs,
even worse,
they're the new dark pool, right? And the regulation that you're seeing at OTC is only a good thing, right? It really, as much as it may come, it really doesn't stagnate companies, because companies don't have to be fully reporting to trade, right? So there's levels to it, as they say in life, right? There's levels to it, but that regulation is only going to help, right? And
those true pump and dumps, like you mentioned, with the like you saw it's no longer the pinks, it's now those startup coins or the shit coins, like
exactly.
How they had
or your NFT.
They had
those.
Remember they had
on
the
NFT.
Remember they did the ape coin, which was completely BS, and then they were trying to ride on the AMC wave. It's all things.
It's the new
you got
dark
a few
pool.
guys with a lot of money. They come together and they say, "Hey, let's pump the shit out of this thing, take it up a couple zeros," and that's they own the whole float. So,
well, it's a new dark pool, and I think the OTC used to be these a whole bunch of listings where there was nothing underneath, right? Well, that's crypto now, right? There's really nothing underneath. NFT is a little bit better with a roadmap in some communities, but now you're seeing more. Like I said, this is still new. Just go to the wiki page and read the history. The evolution of the OTC markets as it stands today with the 3 tiers is new. The idea of regulating that body is new. The pink sheets didn't want to be regulated. That's why, it was pink sheets. It was the ability to be able to get quoted through FINRA, directly and not have to worry about it. But now that they join them together, it's becoming more uniform. There's more checks and balances. And that's what brings in eventually big capital, right? Big capital comes in when they're safe. That's why New York Stock Exchange has more volume than the OTC, because a bank can go there and be like, we're safe that, Ernst & Young did their job auditing. And then even after that, New York Stock Exchange did its job by having requirements for board resolutions and, meetings and whatever it may be, that we're confident enough to invest a big sum of money. So I think as you go up that, and you're going to find more liquidity. You're going to find more money in the markets.
And even if they go bankrupt, who gets paid out first? It's always the funds. We're always.
What's the debt holder? To be clear, right? Bankruptcy is the first people that get paid are debt. That's why debt is so important. That's why when financings happen, a lot of people want that debt, in addition to other reasons why, convertible and free trading. There's a lot of reasons why, but generally in corporate law, if a company goes bankrupt, the first people that get paid back are the debt. The second people are equity holders. So. Yeah, you're right. That's the debt holders are going to get paid out first in a bankruptcy. That's another interesting play, right? There's a lot of companies that go into these Chapter 13s, and if you can figure out how to maneuver those, I remember Sears was, rocking for. There's a lot of companies that come in and then they touch it and then they come back out, on a crazy valuation because they restructured the whole deal. They went to court, got rid of all the debt, right?
Hertz,
Lawyers were like, so.
Hertz just did it. They went down to what? I forgot what it was, and then shot back.
Oh yeah, dude, that was a great example. That stock blew. The stock was like $1 and went to 30x. I was like, holy shit.
Yeah, that's just it's there. It's there, and then once the liquidity will come back, like Nick was saying, the liquidity will come back. Once a lot of this trash is weeded out, and then there's just nothing but valid, or at least quasi legitimate. Everybody is somewhat legitimate left in the pink sheets. You're going to have people with big money that'll feel a lot more comfortable pouring into some of these stocks.
I saw a great quote that contradicts everyday trader that I've seen on FinTwit, but it was like, don't worry about volume and liquidity, worry about being right? Because when you're right, the liquidity will eventually come. Somebody will want that piece of paper. Exactly. Like they will come knocking on the door. Somewhere along the line, they're going to want it. And one stock that I watched for a long time, I haven't watched in like a year, was HEWA, healthcare warehouse, HEWA, HEWA, fucking producing like $7 million in revenue. The stock never moved. There was no volume, but I've seen that play before. Like venture capital backed, tight flow. They don't care about volume. They already got their money. They just want to build a business. They're not worried about volume to finance their company. And as soon as that company's valuable enough, the private partner that was invested in them in the first place is going to buy them out, right? And they're going to take it private. And they're going to have $100 million company sitting there that they might have bought for $67 million because the stock price didn't move. But if you were fortunate enough to buy that stock and hold out when they did privatize that deal, you're Carl Icahn. You're Carl Icahn, right? You're sitting there like, nah, give me $40. Like the stock's trading at 5 cents. Like, I don't care. Give me 40. I read the financials, right? And you're just sitting there. So opportunity everywhere, man.
Absolutely.
Scalp, awesome talking with you, buddy. Really great back and forth. Nick as well. Love you guys. That was awesome. Really, really good stuff we got.
Hey,
appreciate
man.
the convos. Love to do it again with you guys and everyone in here.
Absolutely. You're welcome anytime. And I hope you guys all have a great trading week, and let's get this OTC going.